You wake up to news of another conflict, another war, and think it's just geopolitics, right? But as the Econ Barbarian, I'm here to smash that illusion. War isn't just about battles. It's a financial machine tearing through your investments, taxes, and future wealth. Welcome to Econ Barbarian, where I'm your finance maverick, and today we're ripping apart how wars drive economic shifts that hit your pocketbook. With tensions flaring in Eastern Europe, the South China Sea, and now whispers of unrest in the Horn of Africa as of August 2025, the stakes are higher than ever. This isn't just about headlines, it's about the money trail behind every missile and peace talk. Stick around, the revelations might just change how you conquer your finances. War isn't cheap, and the Econ Barbarian has the numbers to prove it. The global cost of conflicts since 2001, including the Iraq and Afghanistan wars, has surpassed $8 trillion, according to Brown University's Costs of War project. $8,000 billion, enough to fund universal healthcare in the US for decades or erase student debt for millions. In 2024, the US defense budget hit $886 billion, a 5% jump from 2023, driven by new threats like hypersonic missile development. But direct spending is just the tip. Reconstruction efforts, refugee crises, and lost trade add $2.3 trillion annually. Take Ukraine. The 2022 invasion slashed its GDP by 35%, with recovery costs now estimated at $411 billion, a figure rising as infrastructure crumbles. In 2025, NATO's push for 2.5% GDP military spending across member states adds another $100 billion. While African nations like Ethiopia face $50 billion in conflict-related losses from the Tigray War. War drains economies, yet it spins a web of winners you'd never suspect. While nations bleed, the defense sector thrives like a phoenix rising from ashes, and the Econ Barbarian is here to expose the feast. Companies like Lockheed Martin and Raytheon saw stock gains of 20–30% during the 2022 Ukraine conflict escalation, with Lockheed's F-35 program securing $80 billion in contracts last year. Raytheon's missile systems, vital in modern warfare, boosted revenues by 18% in 2024, fueled by demand for Patriot systems. Smaller players cash in too. Drone maker AeroVironment jumped 50% as unmanned tech became a battlefield game-changer, while cyber defense firm CrowdStrike surged 25% due to war-driven cyber attacks. Shipbuilders like Huntington Ingalls Industries gained 15% with naval contract renewals, and even AI firms like Palantir saw a 20% uptick for military data analytics. This isn't just profit, it's a gold rush fueled by conflict. But the cycle is brutal. Gains often crash when peace talks emerge, as seen in the 2019 Syria ceasefire dip of 15% for defense stocks. Are you ready to navigate this volatile wave? War doesn't just boost defense stocks, it wreaks havoc on your finances, and the Econ Barbarian is here to sound the alarm. The 2022 Russia-Ukraine war sent energy prices soaring, with oil peaking at $120 per barrel, triggering a global inflation wave. The US hit 9.1% inflation in mid-2022, the highest in 40 years, worsened by disrupted grain and gas supplies from the Black Sea. Currencies took a beating. Sanctions on Russia devalued the ruble by 50%, while the yen weakened 10% as Japan faced supply chain shocks from East Asian tensions. In 2025, Middle East flare-ups could push oil to $150, adding 2–3% to global inflation per IMF forecasts, while food prices like wheat jumped 40% in 2022, hitting low-income households hardest. The euro faced pressure too, dropping 8% against the dollar amid European energy fears, and emerging markets like Turkey saw the lira lose 20% in 2024 as war rumors spread. The Econ Barbarian warns, war is a hidden tax on your savings. How's your budget coping with these shocks? Chaos breeds opportunity, and the Econ Barbarian is here to raid the spoils. Beyond defense, commodities shine bright. Copper and aluminum prices rose 25% in 2023 due to industrial demands in conflict zones, while gold hit $2,500 an ounce during peak Ukraine tensions, driving ETF GLD to new highs. Energy stocks like ExxonMobil gained 15% from oil spikes, and rare earth metals, critical for military tech, saw a 30% uptick. Even agricultural firms like Archer Daniels Midland rose 10% as food security fears grew. But risks loom large. Supply chain disruptions can tank profits if ports close, as seen in the 2024 Red Sea crisis, where shipping costs jumped 15%. Emerging markets like India, boosting defense spending by 10% in 2025, offer growth potential, while safe haven bonds like U.S. Treasuries yielded 4% during 2022 volatility. My advice? Diversify with war-resistant sectors like healthcare or renewable energy, and hedge with gold or silver. Have you considered war-proofing your portfolio? Share your strategy below. The aftermath of war leaves scars that last generations, and the Econ Barbarian is here to reveal the wreckage. Post-World War II, Europe took 20 years to rebuild, costing $300 billion in today's dollars, while Japan's recovery added another $100 billion. Today's conflicts could mirror this. Ukraine's $411 billion recovery estimate is just the start, with Syria losing 60% of its power grid by 2023 and Iraq still $200 billion short of pre-2003 levels. Debt piles up. The U.S. national debt rose $2 trillion during the Afghanistan war, and global debt linked to military spending hit $15 trillion in 2024. In 2025, climate change amplifies the damage. Wars over resources like water could cost $1 trillion by 2030 per the World Bank, as droughts fuel conflict in Africa and Asia. Infrastructure crumbles, trade routes shift, and labor markets shrink. Afghanistan's workforce dropped 20% since 2001. The Econ Barbarian sees a future of higher taxes, slower growth, and resource wars unless we adapt. What's your outlook on this economic hangover? War's ripple effects extend to geopolitics, shaking markets daily, and the Econ Barbarian is here to decode the chaos. The 2025 South China Sea tensions have rattled shipping routes, with container costs up 15% since January, while the S&P 500 dropped 5% during the 2022 Ukraine invasion. Safe haven assets like bonds surged, with U.S. 10-year treasuries hitting 4% yields, but emerging markets faced capital flight. Turkey's lira lost 20% in 2024 as war rumors spread. Currency markets turned volatile. The euro weakened 8% against the dollar amid European energy fears, and the Chinese yuan faced pressure from Taiwan's trade tensions. Analysts predict a 10–15% market correction if a major conflict escalates by year-end, with tech stocks like Nvidia dipping 10% in 2025 simulations. The Econ Barbarian says watch these signals. Geopolitical risk is your early warning system. Have you noticed market shifts where you are? So, how do you protect your wallet in this war-driven economy? The Econ Barbarian has your battle plan. Start with budgeting. Cut non-essentials as inflation bites, saving 10–15% of income. Build an emergency fund covering 6–12 months, especially with job losses in war-affected supply chains like Ukraine's 15% unemployment spike. Invest smartly. Dollar cost average into ETFs like VTI for stability, or XLE for energy exposure, but avoid over-concentration in defense. Hedge with gold, which hit $2,600 in 2025, or crypto if you're bold. Bitcoin touched $75,000 during recent volatility. Support peace by donating to NGOs like the Red Cross, which aided 10 million displaced in 2024, or advocate for diplomacy. Global peace talks saved $50 billion in 2023 conflict costs. The Econ Barbarian urges action over panic. How are you securing your finances? War isn't just a headline, it's a financial force reshaping your world. We've uncovered the costs, the winners, the risks, the markets, your options, and global solutions, but the battle's far from over. Subscribe to Econ Barbarian for more dives into economic shadows, hit the bell for updates, and drop a comment. What's your view on war's economic impact? Should we invest in defense, push for peace, or both? Stay curious, stay sharp.